Hello, hello. This is the Shades of Grey podcast. I am one of the co-hosts. My name is Monique Hoggard with EXP.
And I am Jasmine Carr with EXP. And this is the Shades of Grey show. And it's the Shades of Grey because not everything in real estate is black and white.
There's always shades of gray. So today we are going to discuss financing and investment strategies. I'll start off just by letting you all know some of the ways that you can finance your investment. One of the ways is through owner financing. And with owner financing, that basically means that the seller is now taking the role of the bank or the lender. They are typically going to provide cash to the buyer, and the seller is going to extend credit in the amount of the agreed upon for the sale minus the down payment. Another thing that you can do is tap into your home equity. That is another option with your home equity loan. There's also home equity lines of credit, and those are secured by your home equity, but in this case, you draw the funds needed instead of just one lump sum. You can also do, which is very popular with investors, cash out refi. Everybody knows that term. So you're basically cashing out your existing mortgage and with a larger, and basically replacing it with a larger one. Other creative financing options are fix and flip loans. So you have your hard money lenders, and you also have your private money lenders, which we discussed in a previous situation. And you can also, believe it or not, utilize life insurance policies. So who would have thought of that?
I wouldn't have.
I would have never thought of that. That can be considered a liquid asset depending on the type, which is preferable for lenders. Lenders want liquid assets or liquid cash. And then, probably not so much your traditional anymore, credit cards or personal loans. So you can utilize your credit cards if you have a high enough limit. You can also check with your local bank to see, or your credit union to see if they will provide you a personal loan, which you would have to, definitely make sure that the terms are going to work with what you're trying to do. So Jasmine's going to touch upon some of the other financing options that we see with investment properties.
Yeah, so Monique explained the non-traditional ways that you could go about going ahead and grabbing financing for your investment property, which is always good to know because, as we know, with traditional financing, especially in like the market that we're facing today, the cost of borrowing money can be a little bit higher. So you want to weigh your options to see, okay, do you want to go the traditional route or the non-traditional route? The traditional route is going to look a lot like the way you would purchase a regular property as your primary residence. You're going to go to a lender, you're going to submit a loan application, they're going to check your financials, they're going to check your credit, and based off of that, they're going to give you an interest rate. A lot of the times when it comes to investing a property, they're going to want you to put that 20% down. Just like Monique said, lenders want to make sure that you've got that skin in the game and that you are just as invested as the outcome of this property as they would be financing the property. The other things to look out for are some FHA loans. FHA gives you the benefit of only having to put 3.5% down as opposed to the full 20%. But you do have to keep in mind that with FHA loan, a lot of the times, because it is a loan that is it conforms to government regulations, they want to make sure that you are a primary resident in whatever property you're trying to get a loan out for. So this would help for anyone who's looking at duplexes or multi-unit properties. This will be an avenue for you to be able to explore because you can live on one side of your primary residence and then you can rent out the other side of that primary residence in order to get that income. Lenders can also include the potential rental income that you would be receiving from a property such as that in order to help you in your bottom line on what it is that you're able to to be approved for. So it's very straightforward. It really just depends on what you're looking at and what it is that you're trying to do. Keep in mind, when you're going the non-traditional route, you may have higher interest rates than usual. You may have to put a little bit extra money down, but again, it really depends on what your long-term goal or your investment strategy is, which of course is something that we've already talked about in previous videos. I think that pretty much sums it up, at least for financing. Again, it's a pretty straightforward process. What's most important is really knowing your numbers, learning what it is that you want your return on investment to be, understanding what your costs are, and of course we can refer you to any of our lender partners, whether it be traditional or non-traditional. We are that real estate resource for you, and we can get you in touch with someone who can walk those numbers down to you, or break those numbers down to you, so you get a better understanding of what it is that you're getting into for your investment.
Right. And another loan that we did not mention was the 203B. A lot of times you have individuals who may want to do a fix and flip, but also live in the home after they fix it. So that can be utilized to help with the construction costs. So keep that in mind and check with your lender on that as well. It's called a 203B. Yep, so that is it for us today, guys. Thank you so much for watching. Again, please like and subscribe to our channel. We definitely like your opinions. If there's anything that you would like to hear or see more of, please let us know. But in the meantime, if you need a realtor, my number is 832-578-4021. You can reach me on Instagram at MoveWithMonique2 or Monique on Facebook. And
you can always give me a call at 210-275-3183. And you can catch me on Instagram at Jasmine sells homes, SELLSHOMES. So that concludes what we have for the financing aspect of investing. And we just want to say thank you guys so much for tuning in. Make sure you hit those likes. Make sure you hit those subscribes. If we get high enough, then we may move into a live format so we can take your questions, whatever they are. But in the meantime, if there's anything that you need to know, if we don't know the answer, we will be sure to get it for you. So make sure you drop it down in the comments below.
yes, thank you guys for viewing.
Thank you so much, and y'all have a good one. Bye.